This interview is brought to you in association with Rabobank.
Hello and welcome to another in our series of rural delivery online interviews for 2016. Rabobank's Food and Agribusiness Research and Advisory for February this year identified a number of swing factors that Rabobank believes will shape the outlook for New Zealand agriculture in 2016. With me to discuss that is research analyst Emma Higgins. Emma, thanks for joining me.
Hi, Roger.
Emma, can we just start with what is a swing factor?
Yeah, sure. So swing factors are basically things that we've identified as having the potential to move agricultural prices for New Zealand in one way or the other.
You've picked 5 of them. We're starting with the currency.
Absolutely. So, look, currency is always going to be a mover and a shaker. And further depreciation of the New Zealand dollar will largely be seen as a bit of a tailwind. But the flip side of that is that movements in other currencies and key global competitors is also very crucial to New Zealand's agri outlook as well.
Okay, and the lion's share of that effect on the New Zealand dollar is based on US or a prediction that US interest rates may creep up.
Yep, absolutely. So that's one of our predictions as well. And in addition to that, it's really around interest rate cuts as well, looking to remain on Reserve Bank agenda. So currently we're sitting at 2.5 in terms of the OCR, but there's also the danger of a Chinese slowdown, as well as the downturn on commodity prices impacting national income levels as well as CPI.
How hard is it for you to watch the Chinese economy and make calls? It must be very difficult.
It is. Look, trying to extract data out of China is always a tough proposition. And we are quite fortunate in that we've got analysts on the ground over in China, which do provide us with a bit more comfort around the stats and the data that we're actually putting out around China.
Well, if China's hard to look at, so's the weather. It's thrown up a few surprises. So long El Nino, huh?
Absolutely. Look, a lot of people are sort of suggesting, well, what El Nino? And it just really goes to show that the weather is certainly very hard to predict here in New Zealand. And there's about a 50-50 chance of, as we move through 2016, conditions either playing out as per usual or, in fact, a La Nina stepping in as well, which obviously brings with it a different kind of weather challenges, being a little bit more wet.
Now, going back to China, I think it's always going to be a swing factor, what's happening in China for us, but what are you seeing at the moment?
In terms of dairy, China certainly have been a major player in that regard. And look, they are certainly well on their way to whittling through the inventory. And they are trying to basically rebalance their internal supply and demand at the same time. So look, we're picking a pickup in imports from the middle of 2016 in relation to dairy. On the other hand, if we're talking sheep or sheep meat, look, China certainly is one of the key markets there. And unfortunately, it probably will be challenging trading conditions going forward for 2016. They look, large levels of inventory are sitting in China, and that's largely as a result of increased exports from both New Zealand and Australia, but at the same time, their own domestic inventory levels rising too. So, look, China is certainly a difficult one, and we just try and keep on top of it as much as we can, but it will be quite difficult for those two particular areas.
We are, though, seeing, I think, I'm interested in your response, that even in the Chinese model, there's a limit to growth, both in terms of speed and where the kind of the top of the market may be. Maybe some resistance from consumers to perhaps they can't keep spending at the rate they have been.
Yeah, certainly there could be a little bit of that as well. But, going back to, depending on what market you're looking at, because there is a risk of mixing consumer demand with financial market volatility. And those two don't necessarily go hand in hand. For example, consumption for kiwi fruit and demand for kiwi fruit is quite high in China still, even considering the financial jitters that are going on.
Yeah, actually, let's look at those. Where are your key concerns in terms of financial market volatility?
Key concerns really lie around the impact that it has on the other key global competitors, right? So that's really the biggest issue, is that volatility in some of those markets will certainly impact in terms of competitiveness, and that has a real impact over here in New Zealand on agriculture as well. certainly something to watch.
How quickly does it feed through that what's happening in the marketplace come through to the everyday economy?
Look, I think it comes through in a number of ways, and I think dairy is the best way to explain it. What we saw come through earlier, with the crashes that were earlier this year, was a little bit more subdued consumer spending, I guess, particularly in the lead up to Chinese New Year. So it does come through relatively quickly, but the overall trend, I guess, is still driven by other factors, as well as the market volatility playing as well.
Of course, one of the long-standing benchmarks for agricultural prices, oil prices, and we all know where they are, way down, $30-odd a barrel, not looking like going anywhere soon. Negative energy, you're picking that as being something that's going to be around for a while?
Yeah, look, we're thinking it's going to persist for at least the first half of 2016. Look, the experts in this area really put the crash down to a couple of things, largely around the oversupply from OPEC, as well as defiant US production growth. And obviously the jitters re the health of the Chinese economy also does come into play as well. So there is some expectations that oil markets will begin to stabilise and potentially stage a recovery in 2016. I think what we really do need to watch, though, is really the Middle East political tensions and obviously their bearing on the global market.
One of the things you've got in the report here is a really neat, very easy to look at diagram that says, well, hey, are we bullish or bearish on each of the major areas of agriculture for New Zealand? I just want to rattle through that very quickly if we can. Slightly bullish on dairy, just to the right of centre. What's driving that?
Yeah, sure. So slightly bullish because we are expecting prices to begin to pick up in the later half of 2016. So at the moment, and obviously the latest GDT bears testament to it, is that we've got weak prices, and that's really reflective of the strong global growth. European quotas have come off, led to investment on farm, and we're seeing a lot of production, particularly out of the Netherlands and Ireland. So a lot of that extra milk or dairy product is looking for a home on the international market, and the trouble is that buyers are very well stocked and product is certainly plentiful. So we have expected prices to sort of pick up in the latter half of 2016, but that timing of the recovery will certainly be driven by how quickly the brakes can be applied to global production.
And beef, pretty much one of your most bullish picks for the year ahead.
It is. Look, beef was a bright spot in 2015, and we think that's set to continue for the coming year. We've had multi-year shortages in the local US beef market as the herds have faced, declining numbers thanks to the drought, and that's really driven demand for New Zealand product. And it really comes down to the US. They love a really good beef patty in their burgers, and it's this demand over in the US that is helping farm gate prices over here in New Zealand.
Sheep meat, though, much more middle of the road?
Absolutely. Look, I think 2016 looks like it's set to be another challenging year. Prices were certainly quite disappointing last season, and they've continued to remain under pressure this season also. A lot of it is around the climatic conditions that we had earlier on, actually at the end of 2015, particularly on the east coast. And that really drove a surge in slaughter rates quite early on in the season. And at the same time, demand from key markets, we've already touched on that with China, remains quite sluggish. And European demand also remains quite weak too. So looking ahead, it is going to be challenging trading conditions.
And a similar picture for wool?
Absolutely. Again, challenging too. So, look, there are a few headwinds there, particularly because there's a lot of competition from cheap synthetic fibres, and oil prices remaining low certainly contribute to that as well. And hoping to offset that will be the declining production in New Zealand and Australia. And I guess critical to buffer this, or to certainly help, will be the lower currency rate.
Now, fruit, you're a little bit bearish on fruit, but to the left of centre there. I was surprised at that, but you seem to be saying that, yes, strong crops could challenge marketers.
Yeah, look, that's quite interesting. And actually, strong crops for 2016 right across the board will actually help to boost the export earnings that have been at record levels for 2015. So it is actually looking to be a really good year across the board for fruit. Look, we did break through the $2 billion mark, which is really pleasing to see, and horticulture certainly is a positive story for New Zealand. So there are some really good dynamics for kiwi fruit and apples, particularly in the Asian regions. And these will really help to support higher returns moving into 2016.
And the wine guys, they just keep rocking on. You know, you're very bullish on them. I'm assuming that's all about low dollar, strong demand out of USA.
It is, absolutely. So currency will certainly help, but we've also seen consumer trends flowing in the right direction for New Zealand wine, particularly in the US and also China. What we're seeing is a shift towards a preference for higher priced wine and also those lighter styles, particularly the Sauvignon Blanc. So it's looking good for the wine industry.
Okay. Emma, thanks for your time. Just before we go, you got one to watch out of that set?
Yeah, look, my pick is certainly for beef. It was definitely a bright spot in 2015, and I think that will keep going for the year ahead. The things to watch, though, are that, Brazilian beef market is looking to gain access into the US. So given the size of the industry and the weakness of the Brazilian real, it could be competition, but I think we're in pole position to really maximise on the Australian cattle herd also declining and strong US demand. So watch the space.
Sounds awesome. Emma, thank you so much for your time today. Always great talking to you. We'll talk again, I'm sure.
Awesome. Thanks, Roger.
Bye-bye.
This interview was brought to you in association with Rabobank.